Hi again, guys. Number 2 video. What I'd like to do on this one, hopefully I don't write too big and space myself off the board, but I'll do my best. We have our first homework assignment listed in Pearson, and the third example, it's on page 35, exercise 1-21. This is actually a homework problem. And I'm going to go right through it because it's kind of a high difficulty level for chapter 1, I find. And I like to explain how it's actually gotten. It's a little bit outside the box. What we're doing here is we're rearranging a formula. No one likes to rearrange formulas. I don't either. So what they're giving you are all the variables except for one. Okay? I know that sounds algebraic because it kind of is, even though accounting and algebra have very little to do with each other, except for the accounting equation, assets equals liabilities plus owner's equity. And I'm going to show you the little formula that the financial statement, the third one, the statement of owner's equity, follows. And we're going to rearrange it to solve these problems, okay? So normally when you have your statement of owner's equity, you would have the beginning capital. I'm just going to put BG for short, right? Whatever that is. I'll put some X's, okay? Plus whatever your net income was for the period. Whatever that is gets plussed, okay? Plus any contributions that the owner makes. This is yakking back and forth, okay? Minus anything the owner takes out for personal use. This is called withdrawals. Let's put 1x there. And that equals the ending. This is really bugging me. Ending capital balance. And that's the formula you always use to check on what owner's equity is from the beginning to the end of the period. For the first couple of chapters, almost all of our problems, I would say 85 to 90% are new businesses, okay? So the beginning capital is going to be 0 because it's a brand new business, okay? And then the net income, whatever they made for that period, they often measure in months, sometimes years. That, of course, in the real world, that's much more common to measure for the year ending. But they mostly do the month because they're trying to keep the problem short. We can appreciate that. Imagine if you had to do it for the whole year, it would be awful. You'd be there the whole, weeks and weeks trying to do it. So the net income would be whatever was made, and just say, for example, it was $50,000. Just for example. This thing's bugging me like crazy. Whatever the owner contributed to, in our case, for a new business, it would be to start the business. Say they started the business with $70,000. We're going to see a lot of that for the first transaction. Our sample company is Sheena Bright, who opens up Smart Touch Learning. That's our company, our fictitious company throughout the book. And she starts the business November 1st, 2018, contributing, I forget the amount, I think it's 30. But anyway, we'll get to that soon enough. But this is just a made-up example. And then say I'm the owner and I withdrew $10,000. Okay? So, I want to know what I have in the end. So I started out with 0, right? I started the business with 70. I made 50,000 this period. I took out 10. So that's 120 minus 10. My ending capital should be 110,000. That formula works for any statement of equity for a sole proprietorship, a partnership, an LLC, a corporation, anything. No matter how simple, no matter how complex. This is the formula. Okay? Problem is, in this example, this is what they leave out right here. They give you all the other variables. So what do? We have to solve for net income, fill in the blank. So we kind of got to change the signs. Okay? So, given that, I'm going to erase my little formula because I don't have room to keep it. I wish I did. I wish this board was a little bit bigger, but then where would I put it, right? Okay, so let's do this. My erasers all got left in school, so I got to use a face cloth. Okay. All right, so in this example, and even if you don't have your book when you're doing these problems, the problem appears on Pearson in its entirety. In other words, you can do your homework without the book, if need be, okay, wherever you are. Okay, so we see for this problem, they have total assets. I'm going to use TA for May 31st, right? And it's 122. They can't even give us all the information to start. We even have to we got to make it ourselves. And then they have total liabilities, TL for short, for May 31st of 66,000. Now we know assets equals liabilities plus owner's equity, right? Again, we're filling in the blank. That means our owner's equity would be the subtraction of it, which the owner's equity would be 56, right? Because if assets equal liabilities plus owner's equity, 66 plus 56 equals 122. But this, we need this piece. Can't do the problem without it, okay? We need our ending capital to fit in that equation for the bottom piece. So here's our owner's equity, May 31st. Okay, so that's actually our beginning. So for our ending, we have June 30th. Again, it's only for 1 month. And again, they give us total assets, and I'm taking it right from the book, 287,000. And then our liabilities, 144, which means our owner's equity is the subtraction of that, because assets equal liabilities plus owner's equity, which is missing, fill in the blank. Owner's equity ending, 143,000, June 30th. So these are the two pieces we need to do this problem, because we have to fit them into the formula and solve for net income. Okay? You might say, how the heck am I going to do that? Okay? So we have 3 scenarios. I'm going to try to keep this here and write smaller. Okay, so here's A. There's 3 situations. Here's situation A. In situation A, they say, the owner contributed $10,000 to the business and made no withdrawals. So we're going to start putting the numbers in the formula. Okay, so we know the beginning is 56, right? Because we figured that out by process of elimination, right? We had to fit this in to make assets equal liabilities plus owner's equity, so we just subtracted. That's all we did. So we have the contributions. What did the owner contribute? 10,000. So we would normally add that in, but because we're reversing, the formula, we're going to subtract it. Minus contribution. I'm going to abbreviate it. Notice we're changing the signs because we're rearranging the formula. So the owner contributed 10. So we're going to take that out. Okay. Next we have withdrew 0. So we would normally add in withdrawal. So I'm just going to put withdrawal 0 here just to fill it in. Because if there was a contribution, we'd add it. I'm going to put with D so you can tell it's withdrawal. Okay, so then we're going to start with, I already messed up, I'm so sorry. We're reversing the problem, so we got to start with ending. See, I make mistakes too. Sorry about that. That would be right if I was doing the linear way. Beginning plus net income plus contributions minus withdrawals equals ending, but I'm not. I'm reversing. So this would be ending. Actually, this mistake I still do, and I did it as a student too, so don't do it. Okay, ending is 143, I'm sorry. The first time I copied this problem to do it for you guys, I did the same thing. And I did it again now. Okay, so we have ending. I'm sorry, beginning. Did it again. Minus beginning. That's how I knew I made a mistake, because you got to take out the beginning, which is 56. And now we have all our variables in there. We have our ending. We subtracted out our contributions. We would have added withdrawal if there was anything, but no withdrawal. Take out the beginning, you're going to get net income. I wish this didn't move so much. Okay.
Makeshift board.
So 143 minus 66 means net income is 77,000 in situation 1. And you might say, how do I know I'm right? Well, you do, because you can check. Let me put this over here. I don't think I need to carry the whole book anymore. Okay, so let's prove it. Okay, so now we start with beginning. Beginning's 56. We're going to go with our regular linear formula plus contributions of 10 plus net income. We just figured out net income is 77,000 minus withdrawals. No withdrawals, but I'm filling it in anyway. Right? Equals ending. Let's see if we got it. 56 plus 10, right, is 66, plus 77 is 143. Perfect. So that's the proof we did it right. They don't ask you for the proof, but just so you know you did it right, you can check and make sure. So that's scenario A. We're going to do the same exact thing, and hopefully I'm going to start with the right number this time.